Hello everyone, good morning. Good morning everyone. Good morning traders. It's a beautiful day here. Thursday, the 30th day of October. Welcome to our morning market review. MMR by Rally Trade Rally Academy. We do this every trading day, Monday through Friday, one solid hour of market analysis. We give you tips and tricks, previews, reviews, and how you can navigate the market profitably. My name is Emmanuel Udoku. I'm glad to be here. I'm also happy you are here. But looking at the room this morning, we just have 12 few traders in the room. Please let's give a little bit chance for more persons to join us. So guys, I want to believe you can hear me, but then let's just give 2 to 3 minutes time for more persons to join us, okay? So more persons, they're on their way, they are held by traffic, they have some challenges. So just 2 to 3 minutes time, more persons join us, okay? Thank you very much. So we start in 2 to 3 minutes time again. Hello, traders. I think we can now continue. So, good morning once again. We have good numbers in the room right now. My name is Emmanuel. These are morning market review, guys. We do this every trading day, Monday through Friday. Once a hour of market analysis. We analyze the market. It's a good day to place a trade on the financial market. Put your stop loss, put your take profit. Expect to make it huge and big on the market, guys. Today is Thursday. Weekend is already before us. Weekend we could sweet today. No, from Thursday, Friday, guys. That means today, Thursday is a good day to position ourselves very well across asset classes like currency pair, like commodities, like metals, like oil, like indices. I believe time will permit us to do a lot of analysis for us today. So, guys, I think we can now start. But let's do a little sound check. Let me know if you can hear me, guys. Can you guys hear me? Get to the chat room, please. Let me know if you can hear me. Chat room, drop a comment there. Hey, I can hear you. Good morning, guys. So, okay. Amaka, I can see you there. Thank you. Chinedu, thank you. All right, so let me share my screen. Let's look at the fundamental aspect of things before we can switch over to the chat, okay? So fundamentals. Are you guys still with me? Let's do some fundamentals. So let me share my screen, guys. Okay, so this is forexfactory.com. Thank you for the response. I appreciate this morning, guys. This is forexfactory.com. So this is one website we use to trade fundamentals, right? Among other websites, right? So I think I explained most of the news events that happened there yesterday. And then it has already happened. It has been triggered already. So this is 29th Wednesday. So let's look at the event for today. But this is what happened yesterday. Remember, we promised to give you uh, previews and reviews. So review of what happened yesterday, man. I think the rates for the US, I think that's the strongest news that came out yesterday. So the Federal Reserve actually cut their rate from 4.25% to 4.0%. So this rate cut has already been anticipated on the market for a very long time, right? Therefore, it has already been priced in. By priced in, meaning that traders have already been expecting the rate cuts. So if you're already expecting the rate cuts, if traders are already expecting the rate cut, it simply means a lot of big players all over the world, traders, I mean, they have already been selling the dollar, anticipating the rate cut. So whenever a particular rate cut is being priced in, the market tends to do almost the opposite at the release time. Okay. And it also depends on the press conference that follows suit immediately after the rate cut, whether it is dovish or hawkish. So for yesterday, when this particular news was released, we saw the dollar strengthen a little bit, right? So we saw gold move to the downside by yesterday. Then of course we are seeing that it is coming up again, right? Because it's actually a rate cut. So by right, a rate cut is supposed to, when the cut rate, right, is supposed to uh, make some investors not to be interested in holding assets that are denominated in that currency pair because their returns should be smaller. They stand the chance not to make good returns on their investment because the rate at which they are holding that particular asset, if it can be a bond, right? It's now it's no longer interesting because the interest they will make is now reduced. Simply put, when the rate is reduced, it simply means investors, right, those that would like to invest in that particular asset or country, right, will no longer be interested because the returns they will make will not is now being affected. But if rate is increased, of course, we expect. So now this is just the normal textbook explanation or literature explanation of how rate cuts, rate hikes affects the market, right? But for yesterday, we saw that it has already been priced in. Therefore, when that rate was cut, we saw it move the opposite direction. Of course, it is trying to reverse right now from what we are seeing on instruments like currency pairs and of course instruments like gold and the rest. So guys, let's now look at what the news has for us for today, right? So for today, so once you open the website, you go to www.forexfactory.com, right? Then this is the news for today, right? So for today, we have news from, I'm sure you can see my screen. So we have news from JPY, and that's by 4:15 a.m. Of course, that's the Asian time, right? Asian time is our midnight, right? So those interested in trading midnight, in doing all night on the chart, there are those that trade the Asian session, right? So three major sections we have: the US section, the highest in volatility, the London section, trading started in London. London session has good volatility compared to the Asian session. Asian session, the least of the volatile movement. Okay. So guys, we had this one 4:15 a.m. in the morning. This morning, BOJ, Bank of England, Bank of Japan, Outlook report, policy rate, monetary policy. So it simply means this period, major banks all across the world, I mean central banks, are actually looking at their rates, right? So for Japan, they actually held the rate, right? They held the rate at less than 0.5%, and they held the rate at that particular uh, amount. Then by 7:30, we saw Bank of Japan press conference. Press conference usually to explain why the rate has been held at the same amount. Then we saw then for today we'll be having main refinancing rates, right, from Eurozone, the monetary policy statement. So main refinancing rate is also a rate decision in the Eurozone, right? Because if you look at it, this is the previous is 2.15%. Forecast is same 2.15%. So we're expecting the actual, right? So one way you can use to trade this news is make sure you are present on your chart. Or if you have a trade already running before that time, just like I told you yesterday, you should set a stop loss and take profit on your trade, which should be highly beneficial to you because the market can actually move any direction. But if you don't have a trade, guys, you can be on your chart. You can be on your chart. Use a lower time frame. Then, of course, where you see the market is going, you can enter the market and make money for yourself. Let me show you something, for example. I think that's all we have for today. We don't have much on this fundamental. So let me switch over to my chart so that we can look at how all of those movements yesterday affected the charts. So guys, remember this is Zoom, and of course we are streaming this live on YouTube and recording it also live on YouTube, which means if you get to miss anything, right, you can get back to YouTube and watch this whole recording again. Okay, makes it easier, right, to get back to YouTube and watch it again. So you just Rally Trade on YouTube. Just go to YouTube, type Rally Trade, then you get to see our videos. And please do well to subscribe also, okay? Subscribe. If you have not subscribed, please do well to subscribe to that channel. Like the video, also share it. So let me share my screen real quick, guys. Are you guys still with me? So let me share my screen. So let's look at the chart right now, the chart, guys. So wherever you're joining us from Lagos, from Akure, from Ibadan, from Port Harcourt here in Port Harcourt, from any of the southern states. So I want you to know that we really appreciate you joining us, okay? And of course, so what we normally do is that towards the end of this analysis, I would like to drop my number such that if you have challenges like I did yesterday, if you have challenges that we're not able to cover during the 1 hour of market analysis, so you can do well to reach out to me, right? You can call, you can equally drop a WhatsApp message. You have a trade that is running that you're not too sure of what will be the outcome of the trade. You are afraid of what will be the outcome, something like that. So you can do well to reach out, okay? You will get solution. So let me share my screen right now. I'm back to my screen. So guys, and now can you see my chart? Can you see my chart? So get to the comment section. We have enough time to analyze several instruments as you want it, as you want it. I'm going to be serving you really hot the way you want it, right? So guys, let's you can see my chart, right? Chart. Okay. Okay, you can see my chart. I've been able to share my chart. So check if you can see my chart. Those of us that joined us yesterday and you're joining today, thank you very much. Remember, we do this every trading day, Monday through Friday. It's every day analysis. You don't want to pick a trade without hearing from us, right? Getting to know the kind of analysis, our own market direction, or the direction we want the market to go, right? Or the direction we have analyzed the market to go. So let's start from Euro USD. Remember, we did something on Euro USD yesterday, if you can remember, right? We did something on Euro USD. So Euro USD, as at yesterday, we are on the 4 hours time frame. We saw, so from 4 hours, you want to say, hey, what is happening on the market right now, right? So you want to look at the general perspective view, or if you like, the trend of the market. So we've had this channel, right? And the market has been inside the channel until it came out of the channel right here. It came back inside the channel, pop out again. Yes, it bounced through the channel. Then, of course, it used that channel as a level of support. But wait a minute. Remember yesterday we drew something here. We drew this yesterday. Those of us that were with us yesterday, we drew this triangle, right? And we said the market is squeezing inside the triangle. You remember? Uh-huh. Thank you very much. So the market is squeezing inside the right triangle. I will make a statement. We said the market can break out of the triangle, right? If it breaks out, then you're going to sell, right? But if it breaks above it, yeah, you're going to buy. So, but from what we saw yesterday, the market actually breaks below the like the lower part of it, right? So that's what it said. It took out the support, took out the support. So yesterday we drew this level, this blue area, and we called it a weekly support. Some of you can remember, right? That's why it's good to always follow through, right? So if you join on Monday, you join on Tuesday, you join on Wednesday, man, that's how you get value. It is when you continue, because he said, if ye continue in my word, then are ye my disciple. If you continue. So the blessing is in continuity, it's not in one of. uh, if you continue in my word, then I ye my disciple. So let me turn it to rally trade. If you continue with rally trade, then I ye my traders. So guys, so we saw this level as a support yesterday. The support is actually a weekly support, right? I mean, this blue area, the blue shaded portion is a weekly support. And it happened to be yesterday's support too, right? I mean, daily support of yesterday. Then we said if the market can break through that level, then of course the market is going down. They will say the market is going down. Okay. So what happened yesterday, because of the rate decision that was taken yesterday on the dollar, so we saw this instrument went up, it moved up, but if you notice, it did not trade above this our the trend line, right? This line of the triangle did not trade above it. It stopped there. Why? That place is a resistance. Then it came down, it broke through this particular support. So that is where a sell trade would have come in. So this is H4 time frame. Let me reduce the time frame to a much lower time frame so that we can now see the possibilities that one would have taken advantage of. So I've reduced the time frame, guys. So this is the area where, can you see this candlestick? Hello, everyone. Can you see this candlestick? So this candlestick is that news, right? That was able to break through. So actually, this is the area that the sell is supposed to come in, right? This area the sell. You trading the news, oh, when you see this big move to the downside, the move that move people forward. Uh-huh. Oh my God. When the market moves, it moves people forward. It doesn't move people backward, though. So don't position yourself in such a way that it move you backward, move people forward. So, sir, please confirm with me. Can you see this level? So this level is one level that the cells can come in from here, right? Because this is when it has broken through we saw this level as our daily support, our weekly support, and of course, drawing this our trend line, our triangle, that was equally a dynamic support. So it broke through it. So this is where the sell would have come. So that means you entering around this area, you would have made this kind of profits, right? It's not, how many pips is that? Up to 30 pips, so right? So 30 pips profit. So if you're trading $10 per pip, if you're trading a big volume as big as $10 per pip, that would have been uh, $300, right? Okay, no, it's even far beyond that. This is about 42. Let's call it 40, right? 40. So 40 pips. So if you're trading $10 per pip, that would have been $400, right? If you're trading $1 per pip, that will give you as now for the first one, $10 per pip, $400, that's about let's roughly 600,000, right? 600,000, which is quite manageable. What if you're trading $1 per pip? That's $40, right? $40. $40 is roughly some of you can trade $1 per pip, some of you can trade $10 per pip, some others can trade $20 per pip, even $40 per pip, right? Okay. So that's where the sell would have come in. So now if you watch after that move, we saw a retracement back, right? So the market did retrace. So the market retraced back. Guess where it retraced to? It retraced to this level of resistance. Don't forget, this level is still a resistance because the way we trade the market is the way we live our life, right? So life is lived forward but understood backward. Don't forget that. If you're hearing it for the first time, please write it down. Life is lived forward but understood backward. So the way we trade the chart is the way we trade, is the way we live our life. So let me ask you, do we trade our life or we live our life? Which of those two would be correct? You trade your life, you live your life. Okay, so I said the way we live our life is the same way we trade the financial markets. Because the way we live our life is we live forward because we are done with yesterday, 29th of October. We are now in 30th, right? So we are living forward, right? But understood backward. How do you so the only way to understand what has happened is to just look at what has happened yesterday, right? Okay. So if you watch carefully, you notice if you look at the backward, that's yesterday, this level is still a support. That's why I was making those statements. Still a support. So the market has gotten back to a support. So this is a support, right? So that means from a support, we'll be expecting the market to want to go down, right? Except it breaks the this is a resistance rather, except it breaks the resistance. So the resistance has an edge. So this is the edge. So except it breaks the resistance, otherwise we are trading below this resistance. And the resistance is a strong one. Don't forget, uh, it's a confluence, right? The resistance is actually a confluence of our weekly level of support, turn resistance, right? Because when the market is above it, it's a support. When the market is below it, it's a resistance. So weekly level of support, turn resistance, right? So it's a strong one. And don't forget this our triangle that we drew yesterday, right? So the market is trading below it. We said the market is going to squeeze inside it, and of course it broke out of it. So we are seeing that that level is actually a we are seeing that that level is actually a level of resistance from what we are seeing right here, right? It's a resistance. So if it's a resistance, we're looking at for opportunities to sell, right? So now for me, my opportunity to sell would be what is happening right now. But then to filter it very well, right? So that you don't enter at the wrong time. Filter it very, very well. Remember, my this red line, right, which is my 21 period moving average, has to be seen below my black line, right? So once this red line moves below the black line, then one can jump in with a sell. One can jump in with a sell. Now, that kind of sell is going to be a conservative sell, but an aggressive sell will mean to sell immediately, right? So, guys, an aggressive sell will mean to sell immediately. But a conservative sell will mean to wait, right? For if you have 21 period on your chart, moving average, I mean, and if you have 50 period also. So once the 21 period moves below the 50 period, then it will mean to sell. Okay. So that's a sell right there. So that's for Euro USD, right? So let's look at GBP USD real quick. So GBP USD, we did this analysis yesterday, right? So I'm referring to yesterday because I was here yesterday by the grace of God, and by the grace of God, I'm here today. So guys, we did this analysis yesterday. So remember, we said we are giving you tips and tricks, right? How you can navigate the market, previews and reviews. So let me give you a review of what happened to the market, right? Yesterday. So this is actually a review. So guys, for this my review right now, look carefully. You notice yesterday we looked at GPKZ on the H4 time frame, right? And from that H4 time frame, we said, hey, this market is going downward. Therefore, our directional bias would be to sell, right? You remember yesterday we said to sell. Why? Because I think I actually put these two things here on my chart, and I said the market saw what we call a liquidity, and the liquidity is actually a rare. Rare means relatively equal lows. So the market saw a relatively equal lows. It's a rare, and rare are magnets and magnets. So don't forget magnets. So that means the market will be drawn towards it. That's what I mean by magnets. The more, if you like, the market will be magnetized to it. Using the word magnet to explain magnets. Okay, so that is why the market actually came back to this level and smashed these two relatively equal lows. Of course, stab the liquidity there. And yesterday we said the liquidity there would be stop losses, buy limits, sell stop. So stop orders, limit orders, and of course, sub orders. They are all piled up here. Those orders are money, right? So the market needs those money. So the market even take profit too is part of it. So the market moved towards that area, smash it, of course, start moving down. Then yesterday, then for that yesterday, we said 15 minutes time frame, right? So I'm trying to tell you what happened yesterday so that we can now look at how far the market has gone and what we can do for today, okay? So guys, for today, I think I am not really fast. I'm a bit slow so that I can carry everybody along. So for today, for that yesterday, we said we needed a retracement, right? So this chart you're seeing right here is the chart for yesterday. This chart is chart for yesterday. So yesterday we said the market was somewhere around there, right? So watch carefully so that you understand how this market moves, how this market actually plays some kind of tricks on us, right? So this market uses timing to play some tricks on traders. Once you understand this timing, guys, so that is why in this business, to wait for a thing to happen is actually an asset. You waiting for a thing to happen, a thing that you have deemed it fit that this thing will happen on the market. Now, but then the market will play tricks on you. It will not happen when you want it to happen. It may not happen when you want it to happen. So that's the kind of tricks I'm talking about. For example, yesterday we said the market will need to do a retracement. So this particular area, this particular spot is actually yesterday between 8 a.m. and 9 a.m. So yesterday we said instead of selling immediately, let's wait for the market to do a retracement. Guess what happened? The market dipped a little further, right? See, it did not do exactly what we said, and at the time we said it, right? But later he had to do it. So watch you, so that you understand how the market works. Because understanding how the market works is just about making good profit. You have to understand it. We call it language of financial markets. So this is the language I'm interpreting for you. If you appear in China today and they are speaking that Chan, hey, the price may be cheap, but you don't understand the language, so you may not be able to deal. So understanding it is how you deal with the market. So guys, yesterday the market moved a little bit lower, and guess what? It actually did what we call relatively equal lows. As you can see, right, this low is equal to this low before actually fulfilling this movement upward. So look at that movement upward, right? So you can see it's actually at the same level, right? Remember, we saw the reason why we drew this particular area was because we saw a fair value gap. You remember, three candlestick pattern, and of course they are all the same candlestick style. So bearish candlestick, bearish candlestick, bearish candlestick. The fair value gap is actually from the low of candlestick 1 to the high of candlestick 3. The gap is in candlestick 2. So we saw that yesterday. So we drew this, but guess what happened? The market had to move down even further before coming to breach that gap. As you can see, right? It came back for that area. So this is where the sell is supposed to come in, right? This is where the sales will come in. This is where the sales will come in. Guys, the sales coming in here is big bang, man. So from here, you can see how much the market moved now, right? Good movement, guys. Good movement. And of course, so now this selling around there was before the news. So don't forget. So it moved over 100 pips, right? 100 pips. Man, 100 pips, $1 per pip. That's $100. Guys, $10 per pip. That is $1,000, guys. Now, but you selling at this point was actually not because of the news, right? You were just trading the market's movement, the market structure, right? But then when the news came out, the news actually pushed in that same direction. Now, that's for the review of what has happened. Now, let's look at the preview of what will happen for today, guys. So let's look at what happened for today. So for today, don't forget the H4 time frame is still on a very powerful downward trend, right? As you can see, very powerful downward trend. Because before you want to trade, you want to consider what the big money is looking at, right? So you see on a very powerful downward trend. So if you are seeing any reason to buy, just like the candlestick is printing bullish candlestick right now, just know that those buys are actually to scalp, right? So guys, if you have looked at the bigger time frame, the higher time frame, and you have already conclude the direction the market is going, right, from the higher time frame. Now, if you now switch to a lower time frame and you're trying to trade opposite that direction, just know that that trade is a high risk trade, number one. High risk trade doesn't mean to not give you profit, right? That's number one. Then number two, that trade should have a stop loss because it's high risk, right? Of course, all trades should have stop loss, but that one in particular, very important. So that being said, now don't forget the higher time frame is still nose diving, right? Because we have taken out these lows. Of course, we'll be expecting to some retracement to the upside. Retracement is very important for the market. It's kind of rebalancing what the market has done, right? Offering buy side as long as it has as far as it has offer sell side. Okay, the market moving down is offering sell sides, right? Taking sell side liquidity, I mean. So the market moving up is offering buy side, I mean taking buy side liquidity. So guys, I think we have seen that the market has broken this low. So this low becomes, so a break of this low is what we call break of structure. So the market have broken structures to the downside, guys. We call that BOS. So since the market have broken structures to the downside, any further movement we call that extension. So the market have done enough extension already. So for me personally, I'll be expecting some kind of retracement, right? I'll be expecting some kind of retracement. So let's do this. Let's use Fibonacci on this 4 hours time frame. So I'll draw my Fibonacci from this high. This high is a notable high, right? From that high, I'll draw it to this low, right? So it should be able to tell me how much retracement we're expecting. So from that high to this low. So you can see the market is retracing, but it has only done what we call minor retracement, right? So this is considered a minor retracement on the 4 hour time because this is only 23.6% of the initial move. What we call major retracement at these levels, the market needs to do up to 38.2% of the retracement and also needs to do 61.8% of the retracement. So these are the two major retracement level the market will need to go through before continuing downward, right? So that therefore, technically speaking, I'm expecting more movement to the upside. Now that's for the H4 time frame. Now drop down to a much lower time frame, that would be 15 minutes time frame. Let's see how that plays out here, okay? So technically speaking, we have seen enough movement to the downside on the 4 hours time frame. So I'm expecting a little more retracement either here or here. So you can screenshot this right now, guys. Just like I told you yesterday to screenshot, right? So today, please also screenshot. So screenshot your screen right now. If you're trading with, if you're following this on the phone, screenshot. What about the laptop? Also screenshot, right? So once the price gets here, then you enter a sell for today, right? You enter a sell for the other. Otherwise, you may just miss that sell because the market may want to go down. But before going down, the market will need to go up first, right? The market will need to go up first before going down, right? It has taken a lot of sell side liquidity. You need to grab some buy side liquidity. For example, the market may need to grab this. Let me zoom in. The market will need to grab this liquidity that is resting just above this major high. Don't forget this high where the market fell from is a very sweet spot where a lot of orders will be resting. So before the market goes down, it may need to take out these levels, right? So let me even color this particular one since I asked you to do a screenshot, right? So the market will need to take out this particular one, right? Before going down because that's like a sweet level there. And the market taking another high, we call that liquidity sweep. So the market might need to do this sweep right before going down. Of course, doing that sweep means it has to pass through 0.2%. So that is where you look forward to sell for today. So we are still selling, right? Because we are not anticipating, we are following what we are seeing live and direct happening before our eyes on the chart. So you trade more of what you see on the chart than what you anticipate. So guys, we have done Euro USD, GP USD. Now let's look at the instrument you want us to analyze. Let me go to the chart section right now. So let me know if you have some affinity, special affinity for some instrument. Okay, Anna Yochiku, you have said we should do USD JPY. Okay, so somebody else have said gold. Somebody else have said gold. Okay, but let's do USD JPY first, right? Somebody said Euro USD. We have done a trade on Euro USD. See the trade now. I even took a position on that trade. I took a sell, right? So if you say Euro USD, it means you are just reporting yourself that you are just joining us. So, Oga, why are you reporting yourself? So we took an instant sell on Euro USD, right? And it's giving us profit, right? Giving us profit. The trade is just starting. So we have taken a trade on Euro USD, and that trade is a sell. And we took that some minutes ago. All right, so now USD JPY, right? USD JPY, USD JPY. So let's look for United States dollars versus the almighty Japanese yen, guys. Almighty Japanese yen. Most of you can just join this program, make some money that you use for your data. Yes, now, because if data is a challenge of joining, man, why you join, you get money, you make money that can buy you that data. Mm. Even far beyond that. Don't know. And the most important thing is that you get knowledge because most of this analysis we do, man, the analysis coming from 10 years experience, for some of us, 15 years experience on the market. So all these analyses are a compilation or compilation, that English hard though, compilation of 10 to 15 years of experience. For some of us, even 20 years. Man, so guys, I think you don't want to miss this. So you say USJPY. So let's look at USJPY, guys. Anna Yochuk, right? USJPY. So guys, on USJPY right now, so you want to tell us, so you want to let us know what you're doing on USJPY, Anayo. So if you're asking us to analyze an instrument, please go further and tell us, hey, I have a special love for this instrument. It's just make it fun, right? Or you can just say, I have a trade on it. I am buying. This is the result of it. I am selling. This is the result of it. Most person will not even tell you that I have a trade on it. The trade is on profit. Should I hold it? Once it's on profit, it's their own personal business. They don't want to share it. But if that trade is having accident, that's the time they will not say, see, oh, I have a trade on this trade I have is on negative. No, sir. If your trade is also on profit, you can still share it and say, please, do I continue to hold this trade? Because and that now you do analysis before you place a trade, during the trade, and after the trade. But after the trade, I mean the analysis that will tell you whether to close the trade or not, right? Now, very important because a trade that will give you big profit, you have now rushed to close it. I know it is those kind of profit that will actually augment and, of course, take care of your stop losses because you actually need to take care of your stop losses. Why? We know that the market will hit our stop loss. We know that it will hit our stop loss one way or the other. Are you surprised I'm saying this? So it is your trade, your profiting trade that will take care of your stop loss. So at the end of the day, you'll be in net profits. So Mr. Anayo, thank you very much. You say it is your special currency. He said it is your special currency, special currency. So let's see what the special currency is doing for us right here. So first off, the market gave what we call, by yesterday, I think yesterday we analyzed this instrument, we said it was on an upward trend, right? So this is the upward trend, right? Yesterday, this is yesterday. This area I'm hovering my pointer on is yesterday, right? So yesterday, the market actually took out this high to form a new high. So whenever you see the market taking out highs like that, it simply means we are rocking an upward momentum, right? So that's one of the easiest way to know if we are rocking upward momentum. The market has to violate an existing high. So yesterday we saw the market created this high and violated it. But don't forget, we're equally having an high which we actually violated, right? So when the market is violating highs or trading above recent highs, that's a sign of upward momentum. So therefore, we are seeing upward momentum. So we have established that. Then if you want to talk about the low, of course, the market is actually creating higher lows. The reason why the market is creating higher lows is because man, the previous low becomes a strong low. So this is a strong low, right? This is equally a strong low. So a low that is responsible for breaking a recent high is a strong low. Man, you want to write it down. That one is coming fresh from above. A low that is responsible for breaking a recent high is a strong low. So how do we know strong low? Strong lows are areas where we put our stop losses, right? We hide our stop loss because it's actually we are hiding it behind a strong man. And guys, you know, if a strong man keep it his stop loss, that stop loss is his safety. Oh my God. Is that true? If a strong man keep it his stop loss, that stop loss is in safety. All right, let's leave it there. Let's not take it too far. So look carefully. You notice this actually low, right? Let's follow that same statement. This actually low was actually responsible for taking out this high to form a new high. Therefore, this low is a strong low. So any stop loss that is hidden behind this strong man or strong low is actually a strong is actually a strong stop loss. I mean, it's a place where the market cannot easily get it. So for what we have said, it simply means, hey, this instrument is going upward. So if it's going up, but what can we do? Beautiful. We look out for buying opportunity. Can you see how we are taking it step by step? We are not just jumping, right? And we are analyzing the structure. We are analyzing the structure, the structure, the structure. This is structure. And guys, guess what? If you analyze the structure, you are interacting with the market one-on-one. One-on-one. So quickly, let me run fast because of time. So we have actually created a new high. So guys, we are going up. So this statement simply means if you are having a buy trade already, Mr. Anayo, if you're having a buy trade already, right? You want to nurse the buy is because the profit can get bigger. But before you do that, remember we have traded above this relatively equal highs, right? And we have broken structure. That means every other movement is an extension, right? That's if you can be able to entertain some little retracement on your profits. But if you don't have a trade, now you notice that statement as a trader, you need to learn how to entertain some little retracement on your profits. Entertain some little retracement on your profits. Entertain some little retracement on your profit. That simply means if your profit is about, like if you watch, I have been able to entertain some little retracement on these instruments, this my profit, right? Because when I said that it was somewhere around 30,000 naira, but right now it has reduced to 25. So I've entertained some little retracement, right? So those little retracement means your profit is reducing. But since you are targeting a particular area, you must have protected some part of the profit, but you are targeting a particular area. So long story short, guys, we are buying, right? So let me look for areas where the buys will come in. So if you're buying, if you jump in immediately at this high, you may be buying at what we call overbought, right? Overbought. So you want to enter usually when there is a retracement. So we can look at the left-hand side, drag it to the future. We have a level of support. So you can see how I was able to create this level of support. Then again, this particular candlestick you're seeing right here can serve this down close candlestick, or if you like a bearish candlestick, this red one the entire range can serve as what we call an order block, a bullish order block actually, because it was from that particular candlestick we saw this big bullish movement upward, right? So serving as an order block means it will draw the price back to this area, then before the price will zoom off again. So if you want to buy, this is a good area where you can buy, right? You want to entertain a little retracement first before you buy. It becomes a low risk trade, a good trading system, right? So that's where you buy. So we are buying, right? So if you buy there, your stop loss will most likely be your risk tolerance, or even just below the recent low, or even this low, right? So if you keep it at this low, it means you want to swing the market because it becomes very big. Of course, that's a strong stop loss. So guys, that's for Euro US, that's for USD JPY. I'm sure you got some value there. So Mr. Brown Akinola, you asking, can fair value gap serve as a resistance in an upward market? Now, the answer to this question is a yes, but it needs some kind of explanation, right? Now, if that fair value gap happens to be above your entry, right? Of course, it will serve as a resistance. So fair value gap are actually areas on your chart, gaps, profitable gaps on your chart where the market is drawn towards. Now, if the market is drawn towards that particular area, remember the existing trend will still take its effect, right? So if the market is drawn towards that area, now it is best you trade in the main direction of the existing trend, right? So the answer to your question, Mr. Brown, is yes, fair value gap can serve as a resistance. So therefore, if you already have a trade and the market moving towards the fair value gap, that's a good place for you to take your profit doing day trading. So the next question is, hello sir, what if the market does not retrace? So that is one challenge we normally face in trading. Sometimes we say, hey, the market will retrace, and sometimes it will not retrace, right? So that is it. You just take it like that. It means you have missed a trade. Now, but then if you don't want to miss that trade, what you do is you divide your lot size into two. For example, if you want to enter with 0.1, so you can just enter with 0.05 first, right? Therefore, you are aggressively entering 0.05. If there is a retracement, you complete with another 0.05. But if it moves from there, you're already in the market with 0.05. So that's one trick. That's one trick. That's one trick we use, or one style we use to avoid fear of missing out. Fear of missing out. Fear of missing out. So which other instrument again? Now, let me honor your request again. Oh, what has happened here? That trade I've closed. So let me go to instrument gold, right? That one trade I've closed. But it closed on take profit, right? Closed on take profit. So therefore, it closed at this. I was trying to protect profit, right? Just 15K, quite manageable. But I was expecting this instrument to still go up, right? I was expecting to still go up. So if you look at this, my chart, you notice there are I have a fair value gap software, and this software is on MT5, right? So it's actually reserved for VIPs. If you're not a VIP, you'll not get it. If you're a VIP, reach out to me, okay? So I would like to enter. I entered a buy there, man, because all of these areas are my automatic fair value gap, right? These green areas are areas to buy, right? They are areas to buy. So if you have this on your charts, you can just wait for the market to get to these green areas before you buy, right? Very powerful AI fair value gap on your chart. So it's very powerful because this place it got to, this is where I would have entered the buy. Just imagine entering the buy around this area. Okay, you should have made this profit already, but even though I entered late, right? It has already turned to profit just now. So guys, you will get this software, right? But you must be a VIP. Minimum 2 million in your account. Reach out to me. If you don't have 2 million in your account, still reach out to me then, but you need to do a top up on your account to get this software. This software is only on MT5. So it's a new software on MT5, very powerful. It shows you the exact place to enter a buy, enter a sell, I even have a video on it, right? There's a video on it that can even explain it even further for you. So, guys, on gold, on instrument gold, as you requested, if you watch carefully, you notice we have broken the structure, right? This high, wait a minute, this high is higher than this high, right? Is it not? This high is higher than this high. So that's a momentum shift, right? That's a momentum shift. So, sir, we have seen a momentum shift. So this is what we call momentum shift. The market have shifted momentum to the upside, right? From that particular area. Then if you watch carefully, what really happened here? What really happened here? We can see that there is a low here. There is a low here, right? Then there's another low here. Is it not true? But if you watch carefully, this low is lower than this low. Therefore, the market has tapped the liquidity at the lower part. So we are in order. We are in order, right? So you place your trade, you put your take profit, put your stop loss. Very beautiful. So guys, reach out to me towards the end of this program. Man, it's already 9. Oh. So let me call my number for you, 090-2626-4507. If you need this software, reach out to me. I will send it to you. I will install it for you. But then it's reserved for VIPs, right? For VIPs, minimum 2 million in your account. This VIP fair value gap on MT5. MT5 is not on MT4, right? It is on MT5, such that you only buy where you see the green area, just like I have done. You only sell where you see the red. So therefore, if you buy here now, see where you take your profits. So no guesswork, no guesswork. No guesswork. So guys, let me do one more instrument as bonus for you guys. Bonus. So let me get to the chart room again and see if I would. So you're asking how much is VIP? VIP is minimum 2 million naira, okay? So reach out to me. I've dropped my number. Reach out to me. I've dropped my number, guys. So, okay, somebody said we should do US 2000. Come on, guys. Are you trading US 2000, Mr. Folabi? Now, like it when you trade US 2000, it means you have good capital base and you're looking forward to make it big on that instrument because that instrument is sweet, man. US 2000, US 100 are very sweet instruments, especially US 2000. So let's look at US 2000, guys. US 2000 is not actually for everybody. This instrument is a very big instrument. I mean, when it moves. Now, let's look at it on the higher time for H4, right? So on the H4, what can we see? So this H4 is actually used for long-term traders, right? Those that are those that don't have the time to be checking their charts every 15 minutes or every 4 hours. You want to take a trade and relax yourself, knowing that that trade is surely going in your direction. Okay. So therefore, so from what we have done, you can see that this instrument is largely going upward, right? But if you take a trade there, make sure you have stop loss on your trade. Let's look at these lows. Let's carefully look at these lows. For example, this market formed a low here, right? Form another low. Obviously, this low is higher than this low, right? But guess what? It's formed a low again, but this low is lower than this low. Now, this low being higher than this low means is showing showing us upward momentum. This low, taking out this low, simply means the market is trying to grab the liquidity here. Because after that, we saw it moving upward. It simply means those that have placed a buy, that put their stop loss here, the market actually took them out. So the market took them out before actually going up, right? So that's one thing that normally happens on the market. You have placed the best trade, but the market took you out before now going in your direction. So that's exactly what happened here. So we got a liquidity sweep before it moving upward. That alone explains that this market is on an upward trend, right? Because after doing that, it moved upward. So it came down again, very close. Now both ways. Either it is giving us higher lows, or it is taking out the previous lows and still going upward. Two of them are sign of upward momentum. Two of them are sign of upward momentum. So it gave us another higher, it gave us another higher low here. Then guess what? The market still broke this high to form a new high, broke this high to form a new high. So instrument US 2000 is on a strong upward trend. So for me, if you want, this my line is actually a trend line, right? So it's a very good place one would like to take a buy. Now this is actually H4 time frame. So you go down the time frame, you get to see more levels of support where you can refine your entry, right? You can refine your entry. So I want to buy these areas are looking juicy. For example, you can see this long wick here, right? This long wick simply means there was a huge rejection on the market, right? Huge rejection. That means the market was trying to go down, but big players are saying, hey, wait a minute, you cannot go down like that. I have some buys, big millions of dollars buys. Therefore, it actually got rejected. Therefore, so we are going to look at a much lower time frame, not look for reasons to buy, right? So for me to buy right now, I would like to see the market taking out a low, right? So this low, this is a low for me, right? So the market needs to take out this low before I will buy, right? So if you notice on the 4 hours time frame, one may just want to jump in with a buy, but if it drop down to lower time frame, you will see reasons to want to wait a little bit. That's why the lower time frames are detailed of the higher time frame, especially 15 minutes and lower. Okay, so and waiting for the market to take out this low is what we call liquidity sweep. The market will need to take out some stop losses or some orders before taking a new direction. So once the market take out this low, please take it down and screenshot this. Once the market take out this low, then you buy. When you buy, you put your stop loss at this other low. Then of course you'll take profit up, right? To make it good. So guys, let's leave it here. Thank you very much, guys. 09026264507 Emmanuel. And of course, the market will be with you. 09026264507. So guys, that's my number there. Thank you very much. 09026264507. So guys, thank you very much. Do enjoy your day, make good profit, use stop loss and take profit. Bye for now. Join us tomorrow for another exciting session. Reach out to me on WhatsApp for those of us that need that fair value gap software. Do a top up on your account. And of course, you'll get it. Thank you very much, guys. Bye for now.